Oscar Health shares lit up the screen again on Wednesday, closing at $18.77 after a 16.51% surge that marked the company's third straight day in the green. The rally gathered momentum almost as soon as word broke on Capitol Hill that a bipartisan group of lawmakers is drafting a bill for a brand new Part E of Medicare. In its current form, the proposal would create a self funded federal plan, essentially a public option, that individuals and employers could choose voluntarily alongside traditional private coverage on every state and federal exchange. That single sentence was enough to flip the mood around Oscar. Only a week ago, the stock had slumped on chatter that Medicare's main trust fund might run dry sooner than expected, a worry that spilled over to insurers whose business models ride the same demographic wave. Wednesday's text, however, reframed the risk. Voluntary enrollment means the new Part E would compete, but not automatically replace or crowd out private carriers. If uptake is modest, it could even stretch the solvency of Medicare itself, buying time for the entire ecosystem, including technology-leaning insurers such as Oscar, to adapt. Traders were quick to price in that nuance. Bargain hunters who watched the shares drift lower on insolvency fears found an entry point, and momentum followers joined as the tape accelerated. By the closing bell, volume was above the 30-day average, and the chart showed its steepest 3-day climb since the company's February earnings pop. Of course, competition from a federally backed plan remains a real possibility. OSCR has built its brand on digital tools, concierge-style support, and transparent pricing. If Part E ends up mirroring those strengths on a national scale, margins could tighten. Yet the company also gains optionality. It might administer Part E plans in certain markets or leverage its technology platform to serve beneficiaries that migrate between public and private coverage. For long-term investors, the takeaway is still evolving. Some analysts argue that a handful of artificial intelligence names offer a cleaner growth story with less policy overhang. Others see Oscar's pullback from its 2021 highs as a chance to buy a data-driven insurer on the cusp of profitability. Either way, Wednesday's price action shows how quickly sentiment can swing when regulatory clouds part even briefly. As always, this discussion is for information only, and not a recommendation to buy or sell any security. The legislative text could change, market conditions can reverse, and healthcare policy often moves in intervals measured in months or years. For now, Oscar Health has reclaimed a little of its swagger, reminding Wall Street that in insurance, as in Washington, headlines matter.